Welcome to this beginner's guide to Canadian bookkeeping and key accounting essentials. Bookkeeping in Canada starts with keeping accurate records of every transaction: income, expenses, taxes, and payroll. The first step is choosing the right method: cash basis or accrual basis. Most small businesses start with cash basis, where income and expenses are recorded when money changes hands. Next, it's important to track sales tax, especially HST, GST, or PST, depending on your province. Businesses that earn over $30,000 in revenue annually must register for a sales tax number and charge tax on taxable goods and services. Categorizing expenses correctly is crucial. Common categories include office supplies, travel, meals and entertainment, rent, utilities, and salaries. Keeping digital receipts and using accounting software like QuickBooks or Wave helps simplify this. Don't forget bank reconciliation. Match your bookkeeping records with bank statements every month to catch errors and ensure accuracy. If you have employees, payroll accounting is another key part. You must deduct CPP, EI, and income tax from wages and remit them to the CRA. Always keep backups of your records for at least 6 years, as required by the Canada Revenue Agency. Lastly, consistent and timely bookkeeping helps you make better business decisions and stay compliant with tax laws. That's your quick guide to bookkeeping in Canada. Stay tuned for more practical accounting tips made